All right. Welcome to a Colorado real estate exam prep. And today we're going to go over brokerage relationships and closing settlements. And so, what we're going to do today is we're going to go over these two different sections. We are going to look at some questions that are closely related to this. So, you can think of this as your study session with some exam prep, and it should be good stuff. So, let's get this thing rolling. Let's start this off with brokerage relationships. All right. So the first thing let's talk about the brokerage relationship disclosure. And so what you guys can see over here is on the right hand side, you can look and you can see the brokerage relationship to buyer. These are the definitions of the working relationship. And so this is a Colorado Real Estate Commission approved form. And we can see this right at the very top. You can see that this says this printed portion of this form, except differentiated editions, have been approved by the Colorado Real Estate Commission. And we know in the state of Colorado, because of Conway Bogue, we have the ability to practice limited law. That limited law is in direct correlation when we have an agency relationship, when we are a part of the transaction and we have the ability to do fill in the blank contracts. Well, this is one of those fill in the blank contracts. While this isn't a contract necessarily, this is a disclosure. You can obviously see that the differentiated section is what they've put in. And then those blue pieces, if we were to write in them, that is how they can tell the difference between what the commission has written versus what we have written for the transaction specific. So when we're talking about the brokerage relationship disclosure, it says before receiving any confidential information, because here's the big thing, guys. When we think about implied agency, all right, let's talk about implied agency for a minute. One of the ways that implied agency could show up is someone walks into your open house. You are representing the seller, and a unrepresented buyer walks into the open house and they disclose, hey, you know what? I'm in a position where my landlord is going to kick me out in the next 30 days. I need a place. This place meets all the criteria. I would be willing to spend $50,000 over asking because I'm about to be homeless. Well, what do you have to do with that information? You have to give it to your seller. You have to give it to your client. You have a fiduciary responsibility. And that responsibility means that you actually have to take that information and give it over to your client, the seller. But during this whole interaction, the buyer thought that you were helping them. Now we have implied agency. We understand that dual agency in Colorado is illegal, and now we have an issue. So we actually have to say, whoa, 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 pump the brakes. I represent the seller. We hand them this form, and it says, this is what a seller's agent does. This is what a buyer's agent. This is what a transaction broker does. This is how I would handle a customer relationship. We hand this over to them and we make sure that they understand, hey, this is not a contract. This is just a disclosure. This is just to allow you to understand how I can assist you in this transaction. And so it goes through, it says, hey, I'm a part of a multiple person firm, which all of you will be, because we know in the state of Colorado, you have to have at least 2 years of supervision. And then it goes through and it says how you can assist this person. So it says, hey, I represent someone in this kind of capacity, and this is how I can help you. Can I help them as an agent? Can I help them as a TB? Can I help them as a customer? They don't have to sign, guys. And here's the deal. Like we have to understand that they refuse to sign, which they can. Then we will give it to them and we will refuse to sign. We'll give them a copy. We'll keep a copy. All right. Here's the deal. You might get a sign call. All right. Someone calls one of your signs. You have a listing. Congratulations. You have a listing. And someone calls and says, hey, I'm interested in 123 Main Street. Well, if they start to go down this path of giving you motivating factors, you can actually pause it, right? Because we don't have the ability to hand this form to them at this point. This is over the phone. This might be, right? We have no way of stopping them. And so we would just let them know, like, hey, pump the brakes. I represent the seller. This is how I can assist you. Please don't give me any motivating factors, because whatever you say or do will be used against you by my client, the seller. All right. So, very important form that I think you're going to get a test question on. And so, again, it's going to say agency, transaction broker, customer, where all that stuff shows up right in this form. But then we have this thing in Colorado called transaction brokerage. All right. Firstly, this is the default relationship that we have unless we have this agency agreement signed. Now, what I want you to notice though is you can be a transaction broker or an agent with a signed agreement. Okay. Either one of those, you check the box with your client and you say, hey, I'm going to represent you as an agent. Your client agrees, check the box, you move forward. Or you could do transaction broker. But in the state of Colorado, we know that if we do not have a signed agency agreement, we operate as a transaction broker. Now, you might be saying, like, Charles, like, how does that even happen? Well, the way that something like this would happen is maybe you have a client that calls you that you didn't realize was going to be your client. It's a buddy. And your buddy says, hey, I just noticed this house popped up. It meets all my criteria. I didn't think that I was in the market to buy a house, but I am. I want you to be my agent. Can we go see it now? Maybe not now. You have other things going on, but later on in that day, you jump in the car, you go over to that property, and you're showing them the home. Well, you didn't have an opportunity to get the agency agreement signed. So you would operate as a transaction broker. And we understand that a transaction broker is not an advocate. They're a facilitator. They're a facilitator of the transaction. All right. This is someone that is going to help someone move from point A to the finish line without giving advice. Right. We think of cold AC, right? Confidentiality, obedience, loyalty, disclosure, accountability, care. Well, we're not going to do that with this person. Like, we owe them some things, right? We do owe them disclosure of material facts. We do have to account for their money. And there's going to be limited confidentiality that we're going to have for them. But we're not an agent. They tell us what to do, we'll do it as long as it's within the law, because we know a vicarious liability, right? Vicarious liability says that they tell us to break the law and we break it, we're both in trouble. But when we look at this and they tell us to do something lawful with inside the transaction, we will do it. But we're not advocating for them. Like, whatever they tell us to do, we'll do it, but we're not going to fight for it. We're just going to present paperwork. That's all we're doing. We're presenting. This is also how you would double end a deal. All right. Maybe you represent the seller and you represent a buyer in the same transaction. Well, we know that we don't have representation like that in Colorado because that's dual agency. So how do we do it? Well, we would be in a transaction brokerage relationship with this person, with both people, the buyer and the seller, as just a paper pusher. All right. We're presenting paperwork to one side. We're presenting paperwork to the other side. They're telling us what to do. We're informing them dates and deadlines, right? Those contingency periods. And we're just moving forward. But they ask us, well, Charles, what do you suggest that I do? And I said, well, hey, I suggest that you reach out to a lawyer or a CPA because I cannot give you that information because I'm a transaction broker. And that would be the illegal practice of law at that point because I don't represent you as an agent. So again, guys, just wanted to show this to you. Like, you can be a transaction broker or an agent with this form, but if you do not have a written agreement that says agency, your default in Colorado is transaction broker. So, single agency state. All right. In Colorado, we understand that you have to have a written agreement. We do not have implied agency like that. All right. Like, I think you can get into an applied agency situation where you can get in trouble, but your implied agency does not just turn into agency without a signed agreement. All right. So you must have a written agreement, or we go back to our default TB. Again, loyalty, obedience, full confidentiality. We can't represent both sides. There is no dual agency. And again, remember, agency means advocacy for a client. All right. So we have advocacy for this person. We want them to win. And this is where it gets weird. Here's the deal. There's other states that have dual agency, and agency has advocacy. And what that means is that I want you to win. Well, if I represent the seller, what does winning look like? It probably looks like giving them the most amount of money as possible in the least amount of time. Well, for a buyer, it's probably getting them for the house at the best deal that I possibly can. Well, those conflict, right? Like those do not line up. So that's why we have transaction broker. All right. So we have no dual agency. If you see a dual agency question on your exam, I don't care what the answers are, check is not legal. That's the only answer that makes sense. Is not legal. All right. A single agent can also work with the public, somebody else, the third party as a customer. All right. So you might get a test question. Your test question might be laid up around if you represent someone as an agent, how can you help the other person? Well, they would be helped as a customer. We know that we do not have agency. We don't have agency transaction broker, but we do have agency customer. We also have transaction broker. We do not have customer either. All right. No customer, no agent, no agent transaction broker, no transaction broker. Well, we do have transaction broker. All right. So remember, with agency, that is the only place that we have cold AC. All right. That is the only place where we have loyalty, where we have advocacy. A customer does not get advocacy from us. And so I did put this form up for you. And really, we just look at this thing. We're talking about agency relationships for singles. So it does go through, and we can actually look at this and it says, if the seller agency box of the top of page 1 is checked, brokerage represents the seller as seller's limited agent. And it says if the transaction broker box at the top of the page is checked, then they will be a TB. It says if the seller agency box at the top of 1 is checked, the parties agree that the following applies. And it says they must treat the buyer as a customer. Guys, that's the only way that we can assist a third party is as a customer at this point. If you're an agent for one, you cannot be anything else for anybody else, and it's clear in this contract. But then we think about designated brokerage. All right. You are going to be a designated brokerage. Again, in the state of Colorado, you have to have at least 2 years of supervision. You're going to be a part of a multiple person firm, which means that there's going to be an office policy, right? That the brokerage puts together. And you will be a designated broker, which means that you are the person represented to help the party close the transaction, to get the transaction to the finish line. The designated brokerage, and you can see this, right? It goes through here. It says the selling brokerage firm enter into this agreement. Okay. So the agreement is with the brokerage firm. The agreement is with the brokerage firm, but the brokerage is designating you to help the person. All right. So we look at this as a multiple person firm. If this box is checked broker, as described below, right? There's where your name's going to go. It says, is the individual designated by the brokerage firm to serve the broker of the seller? Because this is a seller listing and it's exclusive right. And it says, and to perform the services for the seller required by the seller contract. It says, if more than one individual is designated, this references in the seller listing contract to the broker to include all persons so designated, including the substitute or additional brokers. It says the brokerage relationship exists only with the broker and does not extend to the employing broker or the firm. Guys, you're going to be an associate broker in the state of Colorado. You hold the highest licensure in the nation. When you have one of these agreements signed, yes, the agreement's with the brokerage. It's not with you. The agreement's with the brokerage, but the brokerage has designated you to assist them, which means that the brokerage, the agency relationship, doesn't extend to anybody else except for who's listed in this agreement. And I think that's big to understand because you guys are going to see some test questions, and the test questions are going to come across as like, well, who's in trouble if something bad happens? Well, firstly, guys, it's the agent that's listed in the contract. Then what they do from there is then they go back to the brokerage firm and see what the brokerage firm did for supervision. But you're the first line of defense. And so there's going to be test questions, and I need you to understand that, is that when you're doing this in the test questions, like the broker and the brokerage firm, no. I mean, the brokerage firm maybe, but it's going to go through you first, and then the E&O insurance claim might go to the managing broker. But you're ultimately responsible. It says the employing broker designates this. And guys, this could be your best friend from high school, your significant other, yourself. The brokerage firm still designates you to help. It says designated brokers may share confidential info only with their supervising broker. So, guys, it's actually in here. It actually reads that your supervising broker has the ability to look over your paperwork, and it does not extend the agency relationship to them. And again, you will have an office policy. You're going to have an office policy because you're a designated broker. And because you're a designated broker, that means you're a part of a multiple person firm. And because you're a part of a multiple person firm, we know there has to be an office policy written by the managing broker. The managing broker writes the office policy. Those are the playground rules. You, as an agent, do not write your own office policy. I think that might be a test question. I also want you to know this. It says in the in-house deals, two designated brokers can each represent opposite sides. Guys, you being part of the brokerage can represent the seller. Someone else being a part of the brokerage can represent the buyer, and that is not dual agency. So much so to where the managing broker could represent the other party, and that's still legal. All right. Your agency agreement only extends to you, nobody else. So the same brokerage house could do both deals, and that is not dual agency. But we were talking about the transaction brokerage. All right. So we're talking about transaction brokerage before. And what you're looking at is the change of status. So if you do not have the agency box only checked, right? We saw that. There's a box that read agency only. If you do not have the agency only box checked, that means that you have been given permission to switch from an agent to a TB if it merits. All right. So if it comes down and there is a situation where it makes sense because you have a buyer and you have a seller and their goals align to where the seller has this buyer that makes sense to buy their house and this buyer likes the house, let's get them together. All right. So we have these guys and this is what they're thinking about. So when we're looking at it and we're talking about how we go through and do the change of status, if that agency only box isn't checked, you have permission. So you have permission. It's already in the listing agreement, but here's the deal. We can't put together the contract to buy and sell until we get this form signed. So this isn't permission. You already got permission in the listing agreement to do this if it arises. Now you're just disclosing that you're executing the right that you already got permission to execute. So unless the client and you check the box agency only in the listing agreement, then if you find yourself in a situation where change of status makes sense, you just do it, present the paperwork, then you do the contract to buy and sell. All right. Also, this is only for this transaction. All right. So just because you drop down to a TB for the seller doesn't mean that if this deal falls apart, that you don't go back up to an agent. You do. You go back up to the agent. All right. Also, if you're helping them on the buy side simultaneously, you would still stay whatever you are with them there. This form does not go anywhere except for this transaction. So again, this transaction falls apart, then you go back up to your elevated position as an agent. And again, you must disclose this before you take in any confidential information, before any disclosure, before any services are rendered. And again, remember, dual agency is never allowed in Colorado. So let's do this. We're going to switch over at this point. Let's look at some questions. The first one I got is around a showing a listing. So a buyer asks to see a broker's listing. The broker must seek permission from the seller, disclose to the buyer his relationship with the seller, have an exclusive agency relationship with the buyer, or provide the buyer with a seller's property disclosure. Yeah, disclose to the buyer their relationship with the seller. A broker must disclose who they represent before showing a listing, even if it's just verbal. Remember, dual agency is not allowed. So you, the broker, can't represent the buyer. You have zero representation for both parties. Upon receiving a call from a prospective buyer interested in a listing, the broker must present the buyer with a disclosure form upon first physical contact, must have the disclosure form signed at first physical contact, may accept confidential information until physical contact, or may orally disclose her representation. And so, looking at this one, guys, this one might get a little confusing, but hopefully you landed on D. And disclosure must happen before accepting confidential information. If you're going through and they start giving you info over the phone, you may have an implied agency situation, right? So if you're not in person, you can disclose it orally. Then when you meet them, you hand them over the document. A broker who has become a transaction broker to double in the sale of her listing must have written permission from both parties, may disclose the seller's motivation for selling, may disclose the buyer will pay more for the listing, or must use a change of status form to notify all parties no later than the title deadline. All right. So when we're looking at this, it says if switching from the agent from transaction broker to double in deal, you must give a change of status form before or when the offer is made. All right. You cannot share confidential information. So when we're looking at this and we're going through, what we're going to get from here is you already have written permission. All right. We already have written permission from the clients. It's in the listing agreements. So before we can go through and do this, what we need to do is we must use the change of status form to go forward. A broker acting as an advocate has which form of representation? Designated broker, transaction broker, a facilitator, an agent. An agent, right? Only agents advocate for their client. A transaction broker stays neutral. Remember, cold AC only applies to agency. A customer, we're going to be fair and honest to them. We're going to disclose material defects. TB, we're staying in the middle. We're a neutral party. But as an agent, we are an advocate. We have a fiduciary responsibility. Under designated brokerage, confidential information info imputes to other brokers in the office. Any broker may work with any buyer or seller. There is no conflict with an in-company transaction. A designated broker may never share confidential information with their supervising broker. Right. There is no conflict with an in-company transaction. With designated brokerage, each broker represents only their own client. The employing broker can supervise, but doesn't share confidential information with other agents. And guys, this will also be in the office policy, right? The office policy is the playground rules. So the office policy, as you're going through and looking at the office policy, it's going to say, this is how you can share information. This is what you're not allowed to share. This will absolutely be in there. A broker exercising loyalty and obedience on behalf of a buyer or seller means the buyer or the seller is a customer, a vendor, a principal, a grantee. Principal, remember, principal and client mean the exact same thing. They will be used interchangeably on your exam. So only agents owe loyalty and obedience, meaning they're working for a principal, not the customer. In an in-company transaction, the employing broker has designated one broker associate to represent the buyer and another to represent the seller. In this situation, the brokerage relationship is with the designated broker for each party, all the brokers within the firm, the employing broker in each of the parties, only a designated broker acting as an agent for the respective party. The designated broker for each party, right? It says each designated broker holds the relationship with their client, not the entire office or the employing broker. The first step a broker must take to change from an agent to a transaction broker to double end a deal is to disclose at the end of the contract to buy and sell, have permission in writing from the buyer and the seller he represents, be a designated broker, use a change of status form. And so what I like about this test question, guys, if you look at this is what we talk about when we say there's two right answers, right? Like you look at this and you're like, well, yeah, I have to have written permission and I'm getting it in the listing agreement. But here's the deal. The next step for this thing to go is the change of status form. So yes, you have to have it in writing, but the very next thing that you have to do before you go into TB is use the form. So the change of status form is how you formally notify the parties. This is a disclosure. Yeah, you already got permission. The permission was granted in your listing agreement prior to putting this thing together. So when you guys hear us talk about, yeah, there's two right answers, this is what it looks like. All right, let's shift gears. That was your brokerage relationship side. All right. What we're going to do now is we're going to jump into closings. And so with your closings, again, we're not going to do prorations. We're not going to talk credits and debits. But what we're going to do is we're going to talk more mechanical. All right. I need to show you guys how we set these things up, because when I'm looking at quiz results, I think this is what's getting you guys. I think you understand credits and debits. I think you understand prorations for the most part. But I think it's the mechanics of everything that's what's tripping people up for their quizzes. So, who's responsible for closing accuracy? Ultimately, guys, it's the listing broker and the brokerage firm. All right. They're the ones that are going through. They're the ones that have hired the title company as a scrivener. Remember the word scrivener. The scrivener is the writer. Remember that just because you hire a title company to help you with the paperwork does not take the responsibility off of you. You are still ultimately responsible. The designated broker must review their client's closing statements. Okay, cool. So when I look at this, designated broker must review. So designated broker who? Well, designated broker your side. If you're the designated broker for the buyer, you're reviewing their closing statement. If you're the designated broker for the seller, you're reviewing their closing statement. You are ultimately responsible for your people. Yeah, the listing brokerage has some ultimate responsibility around the whole package because they're the ones that are in charge of getting this thing across the finish line. And they may have hired a title company to help them, but they hired the title company as a scrivener. Essentially, what's happening is the agent is saying, title company, do this, and the title company is executing. All right. The title company is not a free agent doing whatever they want to do. They're a scrivener. Associate brokers must return all documents to their employing broker. We understand this. We understand that you must hold on to all documentation for 4 years. 4 years is how long you have to hold on to this information. And we understand that there's some of this closing document that we have to get to our employing broker immediately, and we'll talk about that. The closing entities, right? The closing entity could be a title company. It could be an attorney. It could be a broker. They do not represent either party, all right? Those people do not represent the parties. The attorney, while they could be hired for the closing, they don't represent the party as the closing, all right? They're representing it as the closing entity, not as their client. Now, they could be hired by someone, then that's totally different, but we're actually talking about the closing table. That's where we're at right now. They're following the contract terms. We talk about the closing instructions, and what's ultimately giving the guidance to the closing instructions, the contract to buy and sell, the purchase agreement. The purchase agreement already laid out the price, the earnest money, what happens if there's a dispute, the dates and deadlines, all of that, the time of day. It outlines everything. And then the closing instructions are just reaffirming it. So ultimately, everything is based off of the contract to buy and sell. Remember, when we're talking about the closing, we're at the closing table. We're not day one. when we have offer and acceptance. We're not day 3 when we're dropping off earnest money. We're not at the inspection period. We're not at the appraisal period. We're at the closing table. And that's the mindset that I need all of you to have when you're getting a closing question. We've already gone through all that stuff. All that stuff's in the past. We are now handing over money for title. And that's the mindset that you need to have when you're getting one of these questions. Is that if there's a mistake found, if it's minor, we're going to do some stuff, right? We're going to do some corrections and some initials, and we're going to move forward. The dollar one's with an asterisk. But if there's major issues, we may have to reschedule. All right. There may be some rescheduling that's going to happen if there's some major issues that are found on the closing. And remember, you're responsible. So let's talk about closing instructions. I did pull up some closing instructions for you guys to see. And wouldn't you know, this has been approved by the Colorado Real Estate Commission because you actually have the ability to perform a closing as a broker. You, a Colorado real estate agent, have the ability to perform a closing. And this shows you that that's very real because Colorado Real Estate Commission actually has an approved form, which means that you're allowed to do it because you know that if there was an approved form, you couldn't create it because that would be the illegal practice of law. So who are the agreements? So historically, right, it's the buyer, the seller, and the title company. And again, you could do it. A lawyer could do it. But for the most part, we do title company, right? Which also has title insurance and all that fun stuff. Sets expectations for how long the closing will be conducted, right? So it's going to go through and it's going to say, hey, out of X amount of days, we're going to get to the closing table. And it has all the playground rules. Look, it says the title commitment, exceptions, information, closing recordings, preparation of the documents. The closing company will prepare the necessary documents to carry out the terms and conditions of this contract. The deed, the bill of sale, the closing statement, the closing fee. This is the playground rules. But you don't see the real estate agent in here, do you? No, whoever's conducting the closing, buyer, seller, historically speaking, title company. It sets the expectations required for every closing. Every closing has to have one of these. Who's signing it? The buyer and the seller. The agent's not signing this, guys. There is no signature for the agent. And again, where are they pulling all this information? The contract to buy and sell. Guys, I need you to understand this for your exam. I see too many exam takers get messed up here because they think about customary or historically or who benefits. Yes, like absolutely. But if you get a test question that says the contract dictates, that's typically the answer. 99.9% of the time, the contract to buy and sell, the purchase agreement, the contract between the buyer and the seller dictates everything. When we get to the closing statement, it's going to show credits and debits. And then there is typically a 6-column worksheet. It's an internal tool, not given to the parties. The seller's agent, the buyer's agent, they're looking over it, they're signing it. They're typically handing it back to the title company because you're ultimately responsible, right? There's not a whole lot to do for an agent at a closing table. You're really just there for comedic relief and looking over a couple last minute documents. But here's your TD 1000. We're going to talk about that here in a second. So what's in the closing? Well, we have the contract to buy and sell, the closing instructions, the closing statements, the tax certificate, the deed, the TD 1000, the bill of sale, if there's any personal property going through. What's not included? The listing agreement. Here's the thing, guys. Your listing agreement is not a part of this transaction. That's between you and your client. All right. This is between the buyer and the seller. So if you get a test question around this, you're not bringing your listing agreement. You're also not bringing the brokerage relationship disclosures. All right. None of that is going to be put into this package and where both parties get it. Because remember, this is a both party kind of thing. The TD 1000 goes to the county assessor. So let's talk about this. What's the TD 1000? The TD 1000 is a declaration of personal property. All right. So when you go to the closing table as the buyer's agent, this is going to be one of those things that you will actually have to use. Like this is literally like one of the only real things that you're having a real conversation with your client about at the closing table. And what it is they could leave some personal property behind. blinds, carpet, appliances, right? All those have some value associated with them that the lender doesn't historically say, hey, it needs to be on a bill of sale. It's going to go with the property. We expect it to go with the property. And so what you're doing with this form is you are putting the value of those items. Like I think of if you're going to go through and have a yard sale, one day only flash sale, goes on Craigslist, goes on Facebook, goes everywhere, and whatever gets bought, everything else gets thrown away. What can we sell it all for? And then what happens is that number gets subtracted off the purchase price for the county assessor. Guys, property taxes is a county tax. Property taxes is a county tax. It's not a state tax. It's not a federal tax. It's a county tax. All right. So if you live in Jefferson County, it goes to Jefferson County. If you go to Douglas, if you live in Douglas, it goes to Douglas. Denver, right? It goes to all those people. It does not roll up to the state. It does not roll up to a federal level. It stays with the county. And then your bill of sale, guys, that is for transfer of personal property. Let's say you buy a house up in the mountains that had all the custom furniture already in there. And the seller is going to be buy new furniture when they go and they buy their new home. And so they want to leave it behind. Well, it doesn't go in the sale of the home, right? Because here's the deal. How does the lender secure their claim on the money that they lend you, right? They put a lien on the home. They're in the first lien position and they get their money back if you don't make your payment through foreclosure. Well, they don't allow personal property to go on the contract to buy and sell because they can't foreclose on that if you take it. So there has to be a different contracting instrument to purchase furniture, to purchase the hot tub, right? That's all personal property. So that all goes on the bill of sale. All right, who signs what? Guys, again, when we look at this thing, what we're really talking about here is the buyer and their broker. They sign the buyer's closing statement. The seller and their broker, they sign the seller's closing statement. And what do we know? All closing docs must be brought back to the employing broker by the associate broker immediately. All right. I always talk to you guys about 3-day rules, 5-day rules. This is the only immediately rule, right? Where we go through here and we have to do something. This is immediately. So you guys can see this is it. Again, approved by the Colorado Real Estate Commission because you guys have the ability to perform closings. And you can see there's the debits for the seller, there's the credits for the seller, or you switch it over, it's the debits for the buyer, the credits for the buyer. That's all this is, guys. And we go through and we just associate them. And here's the deal. Look at this. None of them say this is always on this person, right? Do you see any that are blacked out to where it says, oh no, this is always on the buyer. Oh no, this is always on the seller. No, right? We don't. This could be picked up by anybody. So it's a big open form. That's where it's laid out. You choose your client, you fill out the information. You are ultimately responsible for this section being correct. And let's just touch it. Tax and loan issues at closing. Firstly, unpaid taxes. Unpaid taxes, guys, for the previous year, that's going to be a debit towards the seller, right? We understand that. That's going to be a debit towards the seller. We're not going to prorate it. If there's something that is missing that is already supposed to be paid, it's going to be taken from the party that owes it, which is going to be the seller. All right. If something is paid in advance or in arrears that has not been paid, they're going to collect that money up front. It's not going to be a let's circle back later. So unpaid taxes from the previous year, we're going to debit from the seller. We're not going to prorate that. We're also going to make sure it's paid in full at the closing table, right? So it's going to probably be debit seller, credit broker / title company. They're going to make the payment. All right. It's not going to go to the buyer. It's not going to be the buyer's responsibility. If we see an assumed loan interest, the seller pays for the days that they actually own the home. The buyer's going to receive the credit. The interest is going to be paid in the rears, right? So that's what this is going to look like. So the seller's going to pay the time. They're going to be debited. The buyer's going to be credited. And then the buyer's going to be going through and making those payments. And then this one, non-residential sellers, income tax withheld if they make a gain. All right. So it's going to get sent to the Department of Revenue. And this is the deal. When we're looking at this thing, it's the lesser of 2% of the sales price or the seller's proceeds. I do have a question in here to show you guys the mechanics of this thing. But what this is if the home price is over $100,000, this is the rule that you have to follow. Now, if you sell the house for $99,000, we're not going to withhold anything. We do not care. Under $99,000, and again, this is a Colorado only question. So 99K, we don't care. $101,000, what we need to know is how much the seller's walking away with. And then we also have to multiply the sales price times 2%. Whichever number is lower is the money that we withhold to make sure that the IRS is getting what they think that they deserve. So let's look at some test questions. Good funds would include all of the following except a wire transfer, a cashier's check, a title insurance company check, or a teller's check. A title insurance company check. Guys, here's the thing. Good funds. These are forms that are guaranteed to clear. Wires, cashier's checks, teller's checks, title company's checks are not accepted because they are not guaranteed. Here's the thing. NSF, non-sufficient funds. We need to be able to know that the money's in the bank. Getting a personal check, because that's all a title insurance company check is a personal check. It hasn't been verified by anything. The wire transfer, obviously we know because the money's in the bank. Cashier's check, teller's check, they've actually verified the money and then the bank has cut the check and sent it. All right, here's your question. A property sold for $450,000. All right, it's already over 100K. We know we're doing some math. The out-of-state seller will owe or will only net $6,000 at closing. How much will the closing entity withhold for income tax? All right, so when we're looking at this thing, what we need to do is we already know it's $450,000. We've got to do some math on this thing. The second thing is the net. They already told us what the net is, so $6,000. The next thing I have to do is I have to go $450,000 times 2%. Whichever one of those numbers is lower is the number that we're going to withhold. In this case, it's $6,000. So the law says the lesser of 2% on anything above 100K. So we're saying we're the lesser of the sales price of 2% and or the seller's net proceeds. 2% of $450, $9,000. Versus 6K. Which one is less? $6,000. That is what we withhold. The buyer's closing statement is given, reviewed, and signed by the seller and the designated broker, the seller and the buyer only, the buyer and the designated broker, or the title company. Well, we're talking about the buyer's closing statement. We know that we're responsible for our client, buyer, and their designated broker. Each party reviews and signs their own closing statement with their designated agent. The real property declaration, transfer declaration, is completed at closing and sent to the Real Estate Commission, the Department of Revenue, the county assessor's office, or the state engineer. The county assessor's office, right? The TD 1000, that's what this is. This is money that is helping the county figure out how much they should be taxing you. All right. So they're removing purchase price minus personal property equals what we get to tax you on. Bill of sales convey title to fixtures, real or personal property, real property. All right. So we're looking at this, and again, here it is, 2 right answers. But the more right answers, your personal property, right? Like a fixture is personal or is attached to the house. Your real property, you're like, okay, cool. Like there's real property and personal property on there. It could be that. Real property is not an answer because that's the house. But the personal property, fixtures and real property are transferred by the deed because they're attached and it is the home. And then your bills of sale transfer personal property only. The closing instructions are a 3-way party agreement between the buyer, the seller, and Lender, title company, buyer's broker, listing broker. The title company, right? So the buyer and the seller hire the title company via the closing instructions form. Brokers don't sign this form. Again, the brokers can complete the closing, right? We understand this, but when we're looking at it, the closing is going to be with the title company. So the only parties that are selling are the buyer and the seller because they're the ones hiring the title company, not the agent. The closing instructions are a three-party agreement between the buyer, seller, and again, the title company, right? The buyer and the seller hire the title company. If the taxes for the preceding year have not been paid at the time of closing, how will they be handled on the closing statement? Prorated will be paid out at closing, a credit on the buyers, a debit on the sellers. Well, again, it's the preceding year and it has not been paid out yet, guys. So what's going to happen is this is a late payment for the taxes. So it's going to be a debit to the seller. The seller is going to be debited and it's going to go to the title company / broker, right? When we're looking at this, taxes are paid in the arrears. So the seller's going to get debited for the full year. It's not going to get prorated. The buyer didn't live there, right? When I think about prorations, I think about fairness, right? Not everything's fair in this world, but when I think about prorations, I think about fairness. So the seller lived in it. They're responsible, not the buyer. The buyer is not responsible in this case. Once a closing is completed, the broker associate must make copies of her file and review prior to submitting, must return all closing documents to the employing broker immediately, authorize the closing entity to return the documents as soon as they can, or has a minimum 24 hours to return all the closing documents. Immediately, right? Per the commission rules, broker associates must immediately deliver all closing docs to their employing broker.